All right, guys, how's it going, all you devils out there? Let's see. It's about 12:30 for me here. All right, so we're going to look at Bitcoin, Ethereum, and the S&P here, but I'm not going to dive as deeply into the Elliott. There's not enough progress made here. There's a lot of Elliotticians kind of guessing in here, including myself as well as some of the members of my team here. So we'll just do a quick review on these. Then I'm going to talk a little bit more about entry technique based on some comments we got last week or the week before, just in general. Oh, so of course, as we look at it here, it would appear that we've got a pretty good candidate here for this to be done, right? Nice looking impulse, right? We talk about the right look. Well, there you got it. You have it. And we left this here. Oh, one of my team members here. Proposed this just in case, because we're sitting here. Well, you can see here we just retrace to the 618 here. That's actually, by the way, that's Sonar Labs indicator doing that, which is kind of nice, right? This is my little segue to remind you. Sonar Labs is what we use for market structure, and our link is below. You can take a look at that in the link bio here. You get a 10% discount. All right, so there's my promo. So if we look here on the possibility here that we're going to hold here as candidate for a wave 2, you see the volume profile supports here. We're coming right up to the little ledge. If we were to come out of here, maybe we can get an ABC into a 1 and we could finish this in some sort of a diag, right? For the idea that the 5 has got another leg, or we've got another leg here in the 5th, right? So, but we'd have to do it through a diag because you don't have it really... kind of a rough case for an impulse here. I mean, it's iffy, right? But in case we go here, that's a contender here that we go. I think higher probability is likely the top is in here through this double top here. You note here I'm over on BitGet. This is the perpetual futures contract, just for something different. And right, since BitGet is our sponsor, and I'm always going to use their charts just to remind you. And also, didn't mean to start with so much promo, but underneath, right, BitGet's, right, as they sponsor, right, we get a little a deal with them. And of course, if you were to sign up for that exchange, we'd get a little kicker off of that. But we do offer that deal where you get a bonus or off of your first deposit, or you'd get your first month of our educational membership. So some perks there if you use that link, right? So use it, don't use it, right? Whatever you prefer. Okay, so all right, let's assume we're done here, right? If we are and we're starting the correction, well, now you're going to reevaluate that and use a different pull. So then the premise would be we've got a completed impulse, and we'd be looking for something down here in this range where we have this big fair value gap here. You can see, well, Sonar Labs is drawing it as well, right? So somewhere down here would be just the ideal, how we get there, some sort of a 3. That could be, doesn't look like it's done here. So something along those lanes, right? Those lines here, and then we'd be kicking up higher on the anticipation here. We've got a hard low. Well, what we do there, just above 15 and change, we've got a hard low, and now we're starting the bull again. That remains to be seen. I think a lot of Elliotticians are scratching their head here. This is tricky, right? But what we can see, as I just said here, you can see it, right? If I draw it, right? So we're coming just up to the golden zone. We shall see, right? It kind of depends. I think how the market does, right? It's just risk on, risk off here. We are getting the break of correlation here that was long anticipated. We're not tracking the S&P, although risk off days, risk on days. We are seeing some sympathy movement in Bitcoin, but it's not as extreme as it has been in the past. We still cannot, and I'm sad to say, right, as I said this last week, cannot eliminate the possibility that we're just doing a big flat here, and this has more to go. Thus, this is all just part of a big consolidation here. I'd probably bring this down a little bit. We could do it this way, right? So a little push through all of this, just a big corrective action here before there's another move lower. That's not my count in terms of my primary, but we can't eliminate it, just not yet. Oh, we'll see if I come back to a daily, just to reemphasize what that would look like. So we stop here, and now I can't remember. I think it's this one. All right. here. We use the order block here. So same thing, right? We're running right into the golden zone, right? Which we know is the, I'm assuming we all can agree that that's the dominant algo in the market, right? So bumping into this to the golden zone here, not surprising. Even if we come up here, right, the 50's still ahead, come up to the last dominant before we go, okay, well, even if we finish this 5, there's a big supply zone there at that 50, and it's obvious consolidation here, right? So if we come up there, there's likely to be some resistance, and even if we get through, then we got to do it all over here. So a lot of work for the bulls here to carry this on and to just really lock in the idea that we've got our low here. But well, I mean, you can see it a little more clearly here, right? If you think, right, something like that, right? Very nice looking flat could take us down, right? Just can't eliminate it, at least technically, in terms of one of the possible scenarios that we have that we're staring at. Okay, so that's Bitcoin. I think there's a lot of hurry up and wait. Now, I will say that there's no reason not to be considering a trade there. Right, you've got an incredibly, right, look at this. So we're right at that's the God EMA. I've just been using it to save a little screen real estate for the Vegas wave. It would be damn near right on top of it. So that's the average of the 200 SMA and the 200 EMA. Right, it's a good proxy, right? So as we sit there, well, okay, well, we'll look at it in a second. Here, oh shit, where are you? Here, fuck, I now lost them. Here we go, long, right? So if you're long here, you got a target. Oh, pardon me. That's going to be a little much. Here, let's get the actual one on there so we can spot it. Right. So you could take this trade here. I might give that a little more room here. Let's get get that right on there. Oh, let's use the 707. Where are you here? All right. So you might max give it the 707 on the assumption here that, Elliott aside, I got a swing. I'm right into where I know an algo is going to fire. Now, again, right, just because it's there doesn't mean it can't get through. Well, it'd be getting through this way does not mean, right, if we're going to do a deeper correction, right, that's what you're anticipating, that you might, well, of course, one possibility, although it doesn't look like it's done here, is that you might get a bounce there, and then you might finish it, something like that. All right, so what do we have here? We have a low-risk trade. Now, so you look at it and you go, oh, well, okay, man, but if it's done, it's going lower. Yeah, okay. Yeah, right? So meaning you'd get stopped out. Well, show me the trade where you have 100% certainty you're not going to get stopped out, right? There is no such trade. So you got to take some risk somewhere, guys. I mean, you got to take a little risk. But of course, the idea here is, I mean, that's just a first target. Well, there's 6.75 to 1, right? That's the whole point. It's not, oh my God, I don't want to get stopped out, or I'm not sure. You got to take some risks, right? I mean, there's got to be some degree of risk, right? There are no risk-free trades anywhere ever. So you can't go, oh, I don't know, it's coming down. I don't know if I want to take that. I mean, how many trades have we seen react to the golden zone? I don't know, 20, 30,000. Okay, so maybe you look at it and you go, well, all right, I don't know, I'm gonna let that one go just based off the golden zone. Okay, well that's kind of where I was headed here. I'm gonna get there early. Oh, me and my script, my lack of script. I don't think I've ever had a script. Okay, but let's consider this. Well, so the premise would be, it would be unlikely that we'd be putting in the 2 here, right? I mean, again, markets are under no obligation to do anything. Oh, let's go measure move, right? But we're going to put in the 2 wave here for this impulse here at the 23. Okay, it's possible, but it's just not probable. Right? If this is complete, it's much more probable we're going to come deeper. Oh, at the very least, something, maybe check some of that in here, right, where we stalled here. Okay, maybe somewhere between the 38, right? That could be a little bit more. All right, we can understand here. I've got a nice volume cluster here. Maybe the edge of it, right, as you can see what happened here. That might be a contender. So you have a low-risk trade here. Okay, we're right at the 200. We're right at the 618 from this swing. You got enough reason there to take that trade. Now, what else can we do here to kind of sweeten that here? Well, the first assumption is, okay, you're bullish enough that you're willing to take the risk that we have not completed the 5, even though it looks like we have, right? Oh shit. It's more likely that we have. But you're looking at it going, hey man, I can see a potential trade there. Well, what else can we add to this that would give us a little more conviction to take that trade here? Now, I'm not telling you to take that trade. I'm just using this as an example that if you were here and Elliott aside, right? You weren't worried about did an impulse complete here, any of that. Oh shit, I'd take it off here, but I got too much on there. So I wouldn't even worry about it. Let's just look at it here. I've got a swing. I've retraced to. I'm at the 200. We'll call it a 200 EMA, and you're at the golden zone, and you're at a high volume node. So why would you not take the trade? Well, okay. So let's look at some oscillators here. Now this is kind of a trio that I've been kind of replicating some things we do over on the Ninja side. So we've got here our TTM squeeze. Now, whenever we are in any color other than green, we are in a squeeze of some sort. It would be a Keltner squeeze, and there are various 1.5, 2 times the ATR for squeezes here, red being the most severe. But when you have variations of that in squeeze, right? So we have a lack of volatility here as we're in the black and red here. So as we're retracing here, we have a little bit of a squeeze. So that might have you pause. This, oh God, what is this called? This is, Lazy Bear, right? I'm sure most of you guys have run into his work. A couple of these here, I like his stuff. This is his volume accumulation tool, right? So you can use it kind of as a proxy for an OBV. Oh shit, wrong one. It's not bad for that kind of purposes here. As you'll see, right, when we're accumulating here, and then as we drift, we get some divergence here. You see that divergence come down here. It can be a nice proxy because you want to have some indication of volume down here. I mean, there's a gazillion different things you can use. This is not a bad one. It's essentially you're looking for divergences, right? As we approach, much like you would here with the Elliott oscillator. Right, so we're getting some representation here of volume, accumulation, distribution. Here's the Elliott oscillator, so 3, 4, 5 into the 3, right? All of this, right? I mean, absolutely impossible. It's impossible for me to get it on the first click, but impossible to miss the divergence there, right? Which is the benefit of using an Elliott oscillator like that, which is just two moving averages expressed as a histogram. It's no rocket science here, but it gives you a nice look at like, okay. So maybe here as we pop up here, since we look at this, it's not quite equal, but enough to where you might think, oh, maybe there's another leg in this. Since we didn't, this is what you'd anticipate at the 5 or something similar here, but this is like, oh, new life here. So maybe that gets it for us. That would have enough for me to be looking. Now, I wouldn't just be blindly buying here. I'd want to see some signs of a kick here. So one thought is wait for it to come out of the squeeze. Let me bring this down here. This is the TDI, right? One of my favorites, right? Use it a lot when we're day trading. In the futures market here, we're red, right? So if we're coming down here, at very least, you'd like to see it turn blue, or whatever color you're using. So you'd like to see that not be pointing straight down. Now we are coming to I think this one's, we've got 30 and 70, or I think it's 32 and 68 on this one. So this little hook is what you're looking for a potential pivot, right? Or divergence, as you see here, where we get, if you can see it, I know it's a little tricky to see. We get a new low here, we get a new low here, but we get divergence here, right? We run into the center line, and then there's it's hard to miss when the RSI is going, right? That's why it's so popular, probably the most popular. This is just a fancy RSI, right? When we get that, it's hard to miss it, right? Look at all of it, right? When everybody's in alignment here, now you didn't get out of the squeeze until about here, but you've got this pocket here, you've got the RSI cranking, you got volume accumulation, you got it's not a MACD, pardon me. You got the moving average. Let's call it the Elliott oscillators, 534 moving average as a histogram. You've got the trend line here all saying, and now down below is another good one that, it's similar to something we do on the Ninja side when we're day trading the futures. So this one I like here, and I'm going to show you how to use it in conjunction with a couple of other things. So this is, here, let's put it on this way. Let's use this first here. So this is just, again, high-low. This is Chris Moody's. Again, high-low activator version 2, right? Now this is powerful, and used in conjunction with his other tool down here. This can be a great tool for timing entries. Now I like to use it in conjunction, and this is just somewhat habitual from, again, what we do over on the Ninja side here. I like to use a second moving average. Now I happen to have this as a 20-period volume weighted moving average. Again, I'm trying to get representation of volume in addition to momentum indicators. The Gann high-low is it's just kind of a slick moving average here. It's just it's working off of the high or the low based on whatever period that you're giving it. So it's really effective when you have trending market. Here is it'll keep you in the trend, as you can see here if I do this. So the green line, the dots are the volume weighted, and the green line being let's see, it's green on the way up, it's purple on the way down. That's the activator. So it's a 21-period moving average, and when we break the high of the last 21 bars, it'll flip colors, right? So as we do the same thing here, you see this, we're red, right? And then as we turn here, we're breaking the last swing high. So you can set that, and I'll show you here. Again, high-low activator here. So if I go here, I'm just using a 21 period. Now you can put some other markings, but I think that just clutters up your chart. So using a 21 period, I think you'll find that will be a good number. But then as we go below, let's go to, he calls this the multi-time frame. I think it's Moody that does this one. Oh, give me a second here. I'm going to get there eventually. The Gann high-low multi-time frame. So here's the same thing. EMA length is 21 here, but then I'm using just a series of fib numbers, right? That is the fib sequence less the 21, which I have up here, 5, 8, 13, medium 34 and 55, and the long term's an 89. So I think the default is going to be time-based. You'll get 5-minute, 15-minute, 60-minute. So here, let me pull this down a little bit because I don't really care. I just want to see when they're all in alignment or when we're transitioning, i.e. we go to white. So let's bring this back here and look at some of this in conjunction, right? So we come back to, right, I had some comments a couple of weeks ago that this was, I in my video said, hey, this is kind of a layup. Well, it's one of the comment was someone who is trying to learn, said, well, hey man, I was trying to buy it at the 38, but it didn't make the 38. So how is that a layup? Right? If the suggestion was, oh, let it come to the 38, we've got this cluster here, we've got an order block right there, we've got a demand zone here, but it doesn't make the 38. Well, okay, fair enough, right? I can see that, right? I'm very mindful of presenting here in hindsight, right? It's always easier in hindsight. But let's see if we can construct something here that would help you a little bit. So if the market is essentially you're looking for some representation of a pause here in the sell-off, and then we start to move on the idea that what we don't have here is a clean finish in the fifth, right? So it would have been surprising to end up with the fifth here relative to the length of time of the 1, 2. So it was not unreasonable to be looking for this at the 4. You had a kind of a sloppy, choppy, is this the 3? Is it A, B, C into an expanded B? A little bit choppy, but then the 5 coming down is pretty hard to miss. All right, 1, 2, 3, 4, 5. So you're down here, and I can certainly see and sympathize with somebody going, okay, right, new to trading. Well, I heard the 34 is a good spot to go here. I've got this consolidation. I got the high volume node here. Well, a couple of things to note. One, when you see the high volume nodes like this, what is more typical is that the area, well, two things that you want to look for. When we have no volume like this, because market just blew right through it, so no business was done here. So it's not uncommon for the market just fall right through that because there's no support. Where you're more likely to see the reactions are on the edges or ledges, as they're called, right? So you're on the ledge of the mountain here. And the same thing as you approach this side here. Once you get into the high volume here, well then, you get into the chop zone here. But where you will often see a reaction is just to the edge, right to the edge of the low volume node. Now you can draw it like this if you want to, right? I mean, you'd end up damn near with the same result, saying, okay, well, I'm looking for ledge to ledge or edge to edge. Right? About like that, right? So we see here, we pop, we don't get into it because any bull that's looking at that here, if this comes down here, if we get a little too farther, a little too further beyond that pivot, well, there's no support here, so it's going to fall. So often you'll see it'll get a pivot right before the edge, because any bulls that are looking there that are, have some muscle and want to take a trade there, that's where you're likely to see it. And it's the same thing down here. Once we break into it, well, now we're down to the lower ledge, right? And pull that across. And that's often where you'll see that reaction, where you see all the wicks came up here, which is why there's low volume there until we went through. So this is an area to be looking for. Okay, we say, okay, well, great, man. Yeah, again, yeah, thanks a lot in hindsight. Okay, well, let's get to something a little bit more precise. Okay, so here, this is, again, you could just put on, you could put a 21 EMA on, right, and just work the color change. But here, you get a break, right? So we're breaking the last 21 pivot highs, right, to have it flip. Same thing here. So the Gann high-low is just using the period of high-lows here, and then you're getting, that's what's causing the flip of color. So as we come down here, this is right on this bar. Right here, you get the flip. Now, note here, in addition to that, and that's why I use the 20-period volume-weighted moving average, it will often be a leader. It will lead you out of that transition. So as we get into, well, here would be transition. As we get into the transition, right, you see the volume-weighted moving average go white, and we're in between. The Gann high-low has not completely flipped yet. And you get the same thing here. In fact, there's actually a candle that highlights here, that yellow candle here, as we make the flip. Well, note the volume-weighted average goes first. Now, that's a pretty good rip there, right? I mean, that's well, so, assume you're not going to get the tick, the tick high-low. What do we got there? Well, so you got a shitty fill, right? You got something like that. Well, there's $2,400. You a little bit of leverage, right? You get a little bit more comfortable with this. That's probably a pretty decent trade, but we run out of legs up here, right? And we don't actually get to the algo target, although questionable as to whether or not this is an algo here firing from that, although on a smaller degree. It might be. But the idea being, okay, well, all right, I'm down here. I know I'm looking. I've got contenders here. I need a trigger. Well, okay, so the Gann high-low can be a trigger. Volume-weighted average can be a trigger. A 21 EMA can be a trigger. How about, come here. Got you down there somewhere. Whoops. Oh, it's because it's highlighted. Okay. What other triggers could we use? How about the TDI going blue, right? Or green or whatever color, right? I just use them here. So I'm looking for, see, the idea is we're looking for confluence. Oh, God, I'm the worst with that. Okay. We're looking for confluence here. So here's where we go green. The Gann high-low, volume-weighted moving average go green. Now, the TDI, right, has been green for a while. Now we're coming out of the squeeze, right, as we go to a green dot, right? So maybe push this off a dot or a bar or two. Okay, so now we're coming out of the squeeze. We've got the RSI is cranking. I mean, eventually, that's what causes we lose steam here. Note we get outside of the Bollinger Bands, implying that, okay, the thrust of that move here may very well be complete, because here we're all divergence, right? So we're double topping here, but nothing even remotely close in the TDI. So the bulk of that move here may be done. And as now we roll over, well, okay, this is certainly talking to you. We're looking for divergence here in volume. Well, you can certainly, I'm assuming we can see all that. We can see all of that together, right? That's pretty clear. The buyers, right, lost interest. We've got the exact same thing, divergence down here in the Elliott oscillator, if you're using that. And then look at the Gann high-low on multi-time frames. Okay, well, when do we start to roll over here? Well, here's where we get red. Well, now look below, right? So I've got all time frames are red in the multi-time frame Gann high-low. As we flip, right, the 21 Gann high-low flips to purple above, and then the volume-weighted average flips to red, right? We're red down here. We're in a squeeze, right? So we have a lack of volatility. We're red in the RSI. We have volume divergence. We have red in the Elliott Wave oscillator, and we have all time frames red. Do you want to be long still? How about here? All right, let's come back here. Green, 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 blue, green, 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 right? So I mean, you got to, I think where people get into trouble is they're trying to pick the turn, right? You do not have to pick the turn there. Let's say you only got $1,500 of that $2,200 move, or 500 of it with leverage, right? I mean, you've got to take a little risk here. You can't, if you're waiting until it's safe, right? Trade's gone, right? That's what retail does. Well, maybe it's safe now. They'll buy it right here. I mean, it happens every day. Happens every day. Oh, okay. There we go. New high. All right, safe to buy now. Literally, that's what this is. What is the, what do the whales eat? Not the kelp, the krill, right? The krill. They eat the krill, just by the tons, right? I mean, the retail buying up here, that's whale food, right? They're just, oh yeah, oh God, are they really going to do it? Oh my God, they are going to do it. Oh fuck, that's, you know, I talk about this a lot. The single worst. I mean, there is no worse place to enter the market than right there, right? Why? Because you're vulnerable to all this, right? Does someone buying up here looking at divergence down here, do they care? Do they even know to look? Well, you do, right? So if you bought it up here, shame on you, right? You deserve exactly what you got, right? You deserve it. Now, and I say that not to be unsympathetic, right? I've done stupid shit for 30 years. I say that as in like, oh, okay, let's learn from that. Okay, I'm not going to do that again. Or if I'm doing it, there better be a really good reason, because if you've made the mistake and you got your ass handed to you and then you keep making the mistake, well, that's on you, man, right? That's just you being dumb or stubborn, right? I've been there, right? You're like, God damn it. All right, I'm going to try it again and again and again and again. Sooner or later, you're going to stop doing it, right? I don't want to be whale food, right? How about here? How did it work out here? How are the krill here? I don't know why that image got in my head. I've got that image of those giant, of the whales just eating like tons of krill, right? Well, don't be the krill. don't be the krill to the whales. I mean, so again, this is no magic formula here. This is just a combo. I'm kind of recreating some stuff we do over on Ninja. This is no magic formula. You could use variations of this. You want something to cue you into momentum, something to cue you into volume, something that you trust for divergence. Maybe something that would give you some clue as to when volatility is contracting and expanding, right? A squeeze indicator, or you want to put Bollinger Bands on, or anything that's going to give you this clue. This is not a magic combo. It ticks off all the checklist there. Oh, here's squeeze, momentum, volume, momentum, and potential wave analysis here. You could take that off, right? If you didn't, I mean, some people love to use it, right? I've got people on my team absolutely swear by it. They love it for their Elliott account. And it's something like this saying, okay, well here, I posted something this morning in the room about yesterday here in the S&P, where it was just straight down, straight up. And said, if you looked at that, and we'll look at it in a minute, because it was just all red, put in the low, and then just green, right? If you gave well, I digress here. You'd have to have been there. Something like this. So let's say you say, okay, well, I don't trade until everybody's green. Everybody's in alignment. Here, this is there's a little finesse here, because this is really, you could put some Bollinger Bands on there. And as you see it, well, here, shit, do I have them? I do. All right. So there we go. Okay, so let's look at that, right? Do you see the squeeze here? This is the kind of thing you're looking for, right? When we contract like that, like we did here, or like we do here, hey, heads up, right? Because the market's not going to stay there. I mean, look, this is why I leave them here, right? To try and show people. Okay, look, right? Contraction, expansion, contraction, contraction, expansion, contraction, expansion. Contraction, expansion, contraction, expansion. What just happened here? What just happened right here, right? Now look below, squeeze, right? There's contraction. It's coming out. Now that's a good example here. All of these are good examples here, because what leads us out, right? This is why I like to use that volume weighted moving average as well. What leads first, right? The volume. The volume weighted moving average is going to be just below the high low, right? It's just above high low, right? Volume precedes price. So you see that reflected down here. Now, as we blow it up here a little bit more, you start looking here and you say, oh, okay, I can really see here. So now right here, I'm green, here, I'm hot, I'm green. Oh shit, okay, time to buy. You're like, oh shit, I missed it. No, come on, man. No, you didn't miss it, right? Just take the break of the high. Again, you don't need to overcomplicate it. Now, and if you're scalping, that's a different story. Okay, but you're not. We're on a 4-hour chart. You're not scalping. You got everything in telling you time to go. Now you pull back and you go, oh, well, let's put that in context with where I am. fuck, I'm looking for the 4 here. Maybe I've got it. You don't know at that moment in time. You don't know that you have it. At no point do you know anything other than I've got a probable event here. I've got a possible trade here with very low risk and good reward, right? At least 3 to 1. You want to be looking for 3 to 1. So do we have the same thing happening here, right? So we look, so this is where I started. Okay, let's do the same thing over here. Could this be the 2, right? Are we going to get a kicker in the 5th? Well, you might be looking here. So here you're like, oh, it's in the right spot here. We got all that other stuff going. Let me clear some of that up here. Let's take that off again. Oh, shit. Oh, that's probably enough. What else do I have on there? I think that's it. Okay, so we'll take that. All right, so let's look here. So you're thinking, oh, maybe it's a 1-2. Maybe I got a 1-2 here. I'm right where I'd be anticipating the 2. Okay, well, let's look below. Oh, red, 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 squeeze. Is there any reason right now to be thinking about a long? Well, not in addition to that, look on the chart. What side of the high-low activator on, and where's the volume-weighted moving average, right? Red, 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 Y. Oh, see, and this is very, very common, right? This is an easy mistake to make. Well, I'm gonna jump it, right? Believe me, I made this mistake for years. So you're thinking, oh, it's gonna pivot there, right? Look, it stopped there, it pivot there, so I'm gonna take it. Now, there's a few things you could do to fuck yourself up here. You could say, oh, well, it's not there on the 4 hour. Let me go to the 1 hour. Ooh, look, I'm out of a squeeze, still red. Oh, it's not there on the 1 hour. Let me go to the 15-minute. Okay, maybe a little bit better here, but down here, everybody's still red. Again, high-low, still purple. Just my color palette here. Volume-weighted average, still red. Oh, but we're out of the squeeze. True. I got the TDI starting to pop here. Oh, maybe a little accumulation, right? That would potentially, right? This is accumulation. Maybe. Does that look like... if you put your Elliott hat back on, does that look like we'd be done here? Maybe something. Oh, maybe that's a 3 ABC, some sort of a triangle going here. We're going for a 5 down here. Oh shit! Get you over here. Where'd my 3 go? 3. Is that the 4? Could be, or maybe a little triangle going in. We've got some sort of a kick down here. Does it look like it's time? Right? I got mixed signals here. Oh, I got a TDI, but we're rolling over. I'm at the 0 line here. Yes, I'm out of a squeeze, but none of this says go. So we went from 4 to 1 to 15, still not saying buy. And you'll find this will be, this is kind of cruise control trading, right? If you use this for higher time frames, right, and just like Elliott, it's going to be better at 4 hours and above. You're not in for like $100 here, $200 here. You're in for major swings here. Major shit. Let's take that to the daily. Right? If you don't have time, right? You're not day trading all day long. Okay, could you again, where's everybody in alignment? Right here. Okay, everybody's good. Green. Right? Where's everybody red? Red. It sounds silly to say it that way, right? I mean, but you literally, you almost have to, one, you have to teach it, and 2, you have to process it like a 5-year-old. If you tell the 5-year-old, listen, here are the rules. You're only selling when when you see the red dots below the purple, and you're only buying when the green dots are above the green. That's it. They'll follow it, and they'll outtrade probably all of us because they'll follow the rules. Right, we're too smart for that, right? We gotta tweak it, fix it, fuss with it. Oh man, I can do it better. Oh, I'm gonna jump the gun here. I can see that's about to turn. Careful of that, right? Simple, almost always better. Almost always better. Now you can add a little bit, right? So like, oh, okay, well, where's the volume? Where's the support? Like, okay, right here. Now, this is not designed necessarily to where if it flips, that means, oh, I got to sell it. It might be if I was long, I'd take my stop out here, or if I'm trailing with a stop, I'd exit here. Might mean that, but it doesn't necessarily mean, oh, I buy when it's green and then I immediately sell. It's not an auto trading system. It's just kind of a clue here. That's exactly what you wanted to see, was just read enough. Just read enough to where you might get, well, really what you're hoping for there is that sellers plow in, right? And they don't know any better. And they just see, oh, red, oh, RSI is red. Let's sell it, right? And then that's, who has to cover, right? That fuels that last move up. Oh shit! So much for being short. I haven't even gotten to ETH, right? But I just, It seemed like people were looking at the Elliott count going, well, fuck, man, how do I know that the 4 is done? How do I know when to go into the market? How do I was waiting for the 38. It didn't get there. So how do I know to go in? Yeah, it's a layup in hindsight. Well, I mean, again, this is not a magic recipe. This is just a recipe that will accomplish what you're looking for. Volatility, momentum, volume, maybe some multi-time frame, pivots being broken here. This is a good combo here. Let's go to Ethereum here. I'll try and do the same thing on Ethereum here. Well, this is the longer time frame. We looked at this last week. Can we get out of this? Can we get out of this here? We got to come down. This is a little ugly in here. It's iffy, right? So it looks like there's a candidate here that we might come down a little bit lower, but right, this is our invalidation point because we can't, if this is the proposed 1, right, that's where we invalidate here if we break, what is that, 879. And I think you guys have seen one of my lead sensei, James M., who's all over ETH, right? Great technician, great Elliottician. He's brought to attention that the potential is here that we've got a triangle, right, going in, right, which would suggest there's more down, right? That's kind of the bad news. TA, look at it. What we don't have here is enough to where we can eliminate this B. We don't have the kick there that we need, right? We looked at that last week. Oh, shit. Now I have... oh, God, I've got it over here, and I got to find it here. Hang on one second. All right, found it. All right, so this is what it looks like when an Elliottician is struggling to find a count that's tradable here. This is okay, we're trying to label it, but what the hell is it? Where are we, right? You can't get a clean finish up here. All right, this is me going back and forth with another member of my team here. We're WXY maybe, right? So 3, 4, 5 right here. You'd have to truncate. There's a lot of really creative ways to count this here, but at the end of the day, when it's this complicated, I'm on hold because I don't have any conviction in where we are. Now that said, well, let's see if I can do it. Can I take the Elliott out of it because it's not helping me here? And can I use my indicator suite here and see if that's going to help me a little bit? Well, right off the bat here on a 4-hour, I'm below the 200. All right, well, that's a negative. I'm in this big channel here that we've looked at. Oh, let's go to the 8-hour here. This channel here, pretty significant, right? If this is going to hold, I've got a nice, get you right here. Nice 1, 3, 4, right? Didn't get there, right? So is 1, 2 for an extension in the 5th. Could the 5th be higher? It's kind of ugly, right? Maybe. But if we take all, I don't even know how to do it. I think there's a way to highlight it all without eliminating everything here. This untradeable, right? If you're an Elliottician, I don't know why you're trading there. But down here, okay, well, 1, I'm in a squeeze. 2, I'm all red here. I'm red here, and I've gone from white to red, right? Again, just keep it simple. When it's green, okay, we want to be long here. When we're doing this, okay, we had the green here, but now, again, it's not necessarily trying to sell it, but if you're long, well, I don't know that I'd be real comfortable being long if I'm trading off of this set of swings. Now, we've just come down here. We're about to tap the golden zone. So do we have a candidate, right? The same kind of candidate that we had over at Bitcoin? Well, perhaps, right? You've got a potential here. You've got a pivot here. I'd probably want to look at well, here we can just use the volume profile here. So we're coming up on that ledge. So if we're getting right here to that ledge here of the volume profile here, just using visible range, I could drill down a little bit more. But okay, if we're going to go deeper than that, right, I'm going to be a little bit less comfortable. But if I were going to be a buyer, I'd want all of this turning around. Why try and pick the turn? Let's let this turn. Let's at least get the RSI going. Okay, let's at least reduce the volatility here. We've got the potential here for a little volume accumulation, but you'd like to get that on the other side of the 0 line, and you got the 5, the 8, the 13, the 34, the 55, and the 89 all red. So wouldn't you like to see those green like you did right here, I don't like it enough to trade it, right? So as I sit here right here, because this is such a cluster F of I don't know what it is, I wait for that. And if I were going to trade it, I sure as hell wait for everybody to be the same color, right? If it's all red, so I'm not selling it here because I don't have enough conviction tops in. I want to trade that A or whatever we're doing here. I don't want to trade that. I might consider if this retraces, we fail and it sets up for a C, maybe. Although I rarely, because I hold enough Ethereum that it would be, just be kind of some small, lighter swing trading here. I don't see enough here to be adding to the long. It's not good enough. Right? Same premise here in terms of, okay, well, if I'm going to enter, well, let's at least turn some of this around. Let's go over to the ES here. Oh, hang on a sec. All right, found it. So this is an alternate count. We've looked at this a couple of different ways, but now that we're stalling here, well, this will be interesting, right? So of course, right, where do we stall? Golden zone. You could interpret this as an A, B, C into a W, X, A, right? We got a clear 5 here. A, B, pardon me. If this is an A, we can do a 5 here into an A, B, C. Now, the reason I'm kind of leaning this direction here, well, let's see what happens at the golden zone here. I was anticipating this B to get up a little bit higher. We didn't get it. So I think if we're gonna get a stubby C here of an A, B, C, and we came up shy, although we did get a 50 here. We get a 50. Now, okay, we're in the pocket here. You can see all the consolidation here. Now, if we start to go again, if we come out of this golden zone here, well, we got clear targets up here. It's gonna make it interesting as to how we'd count that. Well, it would be easier to reconcile here if this ends up being a B, and then you can kind of see, oh, is this 1, 2? Well, what happens here, right? If we break, right? Well, then the next one here, 4, maybe 5, something like that. Maybe it's got to go lower. Maybe this is 3, 4, 5 of 1 of C. 1, 2, 3, 4, 5, right? Might be something along those lines, right? So we have to wait and see. There's no clarity here. There's no way to know. We're just stuck because if I pull it from this one here, we're kind of stuck in an algo box, right? So golden zone on this side, golden zone on this side, right? They're welcome to trading, right? If you watch the S&P as I do all day long, this is what happens all day, right? One golden zone to the next golden zone to the next golden zone, and there's a gazillion little micros in there. Well, one thing you'll learn if you're a day trader, you never, and I mean never, want to assume a golden zone is going to break. Always assume at the very least you're going to get a reaction, right? Because if you're long or short going into a golden zone, you don't want to assume that it's going to break for sure, right? It'll kick you back here, and of course you would never want to enter at a golden zone, right? You'll be underwater right away. I'm not saying it couldn't break, right? Golden zones have to break, right? Or we'd go sideways forever. So of course they break. Right, where's the next one? But you don't. That would be right up there with entering at that level, right? The high, right? So you can see here, guppies, right? They buy it there. They have no idea that that's there. They buy the breakout, and what does it fall to? The next golden zone. Okay, so hopefully I gave you a few things to think about here. Let's look at this one last time here. What am I doing? 43 shit. Okay, so let's get all this off here. Get you off. All right, let's just look here now at this little technique here. Okay, this is not really hard, right? Okay, let's see. Well, let's take it from, here, we'll take it from here. Oh, okay, let's look. Is everybody red? Everybody's red. Okay, I want to be short. Oh, probably if you took a piece of it here, once we pop on this side, either your trailing stop is out, or you took partials along the way, which is what I would recommend, but of course, easy in hindsight. Partials or full hit, right? So if you took it here and you got to here, you're still not unhappy. Here's the next short, right? If on the assumption here, since we're putting in lower lows and lower highs, right? Always easy in hindsight, but there it is. Lower low, lower low, lower low, lower high, lower low, lower high. Right here, I get a little kickback where I get a little internal change of character, but it doesn't get a break of structure. Here's the last break of structure. Down we go. So here's the low. Here's change of character, right? So all right, and now here you damn near, right? Could be. Do we want to be short here? Nope. Look below. Everybody's green. We still are in a little squeeze, but everybody's green. How about here? Mixed messages, right? Now we get right here, red. This is still, there's still some buyers in there. Still some buyers here, but we're red. And there's going to be times where you're going to have to compromise. You might not get everybody in alignment here. I don't even have the Elliott oscillator on here. This is just volume accumulation, but you're getting divergence here. And even from this pivot to the next pivot. That would be enough, right? So how might you approach that? All right, do you see it? Right to the golden zone. Now you might say, "Oh, right, we didn't flip yet, but as we come back down, right, everybody's red except there were some buyers here. They're still lingering, right? It hasn't rolled over yet." Buyer. Let's go to a 4 hour and see if we can fine tune that a little bit. How about since we started here? Right, if you're an option trader, it's not a bad way to go. Again, right, where the bulls are pulling on, right down here, everybody's red. Everybody's red. Everybody's green. Green, 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 green. Not green anymore. Green, green. When in doubt, simplify, right? The Elliott just adds in terms of context, location. Oh, could this be a B, 1, 2, 1, 2, 3, 4, 5? Looks like I've got a 5 completing down here. Look like we're done here. Does it look like you want to be a long here? Anybody want to be long here? Let's go down. How about a 5 minute? Same idea. Here's yesterday. This is the comment I was making, right? Earlier. Right? If you told a 5-year-old, okay, here's what you do. You push that sell button when this is red and that's purple, and you push the buy button when this is green and that's green. I mean, did you trade it yesterday? Right? I got my ass handed to me on the retrace. All right? Because I thought I saw something right here. It came right to the 200. I shorted that. I got stopped out right there. All right. It was just shocking to see how far that went. There's a lot of options, the dealer hedging issues going on there. It would be my estimate at the end of the day that calls started being bought here. And oh, well, of course, if calls are being bought by traders, market makers have to sell, right? So as it starts to go, then they have to add. They're adding to the fuel because they have to hedge. They're trying to be delta neutral. So that's likely what was happening there. All right, and as we sit here today, now here, where you get on a 5 minute, you get to do a little chop. Is this tradable? Well, it's not ideal, right? It is a Friday. But the morning, right, these can be very, very easy, right? It's what can you do to simplify the decision-making process? Because you can sure as fuck complicate it to where you're like, oh, man, I don't know. I don't just buy it, sell it. There's got to be things that are just very clear where, okay, everything is in alignment here. Okay, I can comfortably take that. Trade micros just to get used to something like this. Okay, I can comfortably take that. Right now, this is the market's not going to cooperate like that all the time. Again, I'm down here on a 5 minute where you'll find this infinitely more. Well, I actually prefer it up on a 4 hour because you can hold these trades. Yeah, let's get you over here. You can hold these for a while. So maybe just something as simple as some option buying. You don't need to buy 6 months worth of option life there. You're trading a 4 hour. You probably be all right with a weekly or a 2. Something that had maybe a couple of weeks, so you're not just going to get eaten alive with time decay. If it's a little choppy along the way, do you think that's golden zone? Golden zone, I guarantee you it is. Oh, I think this one was a 50 to the tick, right? There's the target coming off of the low yesterday. Then right, I'll wrap here. Well, this is kind of a nice example into a double top, right? Right, we see. Thank you, Sonar Labs, right, for drawing that supply zone up here, down, up into that double top, right? There's a equal highs, right? That's kind of a bit of a tell. So let's get our over here. Oh, okay. Well, we're not red yet. We're not red yet, right? We're still holding. The again, high-low activator hasn't switched. We switch right there. Now, look below, right? So I'm red here. I'm out of the squeeze. I'm red underneath. I'm purple there. I've broken the 0 here on the volume accumulation, but I had wicked, right? What you're looking for is wicked divergence there. And then everybody in the GAN high-low multi-time frame is red. Short, 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 short. Little kick here. Note when it gets outside of the Bollinger Bands, we get below 32, right? A little kick back there. That's what creates this little, well, it looks like a little, we got some little consolidation here, not quite a triangle. And then we carry on. Now, do you want to be a buyer? Everybody's red down here. Red, going to 0. Okay, a few things to think about, guys. Okay, hope that gives you some help. And for you guys who are like, okay, great. After the fact, how do I get in? There's a few ideas for you. Okay, guys, have a good one. Got lots of new things coming. New site is, I think, looks like March 1st. But okay, we'll have more info as that gets closer. You guys have a good weekend. Talk to you then.